Now, I'm sure you guys have heard about income tax, capital gains tax, and all other various taxes that are out there in our great big world. But there is one type of tax which is much more sinister than the rest of them, and it effectively means that the lower your income, the more tax you will pay comparatively to someone on a higher income than you. But how can this be possible? How can it be that the higher income you earn, the less of this tax you pay in proportion? Well, this is because this type of tax is applied to every individual equally and evenly. It can be very simple in the form of a sales tax or GST here in Australia. Now, it's important to note that this isn't something that is entirely new. It's been around for decades and we've all paid it at some point. But since this tax is applied evenly to everyone, how come the people with the higher incomes pay less of this? Well, let's look at this example. Say you've got two families, family A and family B. Family A earns 100,000 per year and has two kids, and family B earns 500k per year and also has two kids. Now we can expect that a family of four will be spending somewhere around 4,000 per month on groceries, entertainment, school expenses, even if it's a public school. Now family B, since they do have a higher income, we would also expect that they will be spending more than the first family, but not equally more. Let's put their monthly spend at about 15,000 per month to account for a higher cost of living, private school, and whatnot. Now, if we put their annual spending as a percentage of their income, we will see that the first family pays sales tax on 48% of their income, which is nearly half, whereas family 2, who earns 5 times as much, is only at about 36%. Now contrast this with a family C, who has 4 kids and earn 90,000 per year. Think about how much they would spend on their expenses, how much of their spending would be as a percentage of their income, and any savings that are left over, if any. With these examples, it is very evident to see that the lesser income one earns, the more of this tax will be paid. It's important to note, however, that this tax unfortunately has to be made this way. Can you imagine buying groceries one day and the employee at the checkout asks you to provide proof of your income so they can charge you the relevant tax rates and tax you if your income is high enough? That simply would be ridiculous, and the implementation cost of that would be a complete waste of time, as there are privacy concerns and a whole plethora of other issues that come up. It's just not going to work. Another method that the government could implement would be to give everyone a minimum yearly sales tax-free exemption on their spending limits. For example, everyone in the country gets a tax-free exemption of 10,000 per year. This means that on their normal everyday grocery spending in the year, 10,000 of that will be tax-free and sales tax will not be collected on those dollars. Only on dollars above that, the tax will be collected. Now, 10,000 per year is not enough for anyone to survive on, but the upper class families generally do spend more than the lower class on goods and services. So technically, if this were to work, the wealthy would pay more tax than the lower class. But once again, since the majority of any healthy economy's workers are the middle class, that is a whole chunk of tax dollars that the government misses out on, so this will likely never come into effect. Now, sales tax is just one example of regressive tax. There are simply much more examples that exist in our great big world that you may not even have realized. For example, imagine you're from the middle class and want to spend your hard-earned money traveling first class for the first time in your life. It's an amazing experience for you. The food actually tastes like food and not this. You can stretch your legs for the first time and actually lie down flat. What a journey. It's all amazing until you realize that the tax you paid on your ticket was much higher as compared to your income than your upper class neighbor who's behind you. But you don't care. It's the best $20,000 you've ever spent for a 12-hour journey. Have you ever received a speeding or a parking fine? This is another example of this type of tax that doesn't look at how much wealth or income you generate. It is simply a flat tax. Now, as much as we wish that a speeding ticket will be charged to individuals proportionally to their income, that is, the higher the income, the higher the speeding fine, this is simply not the case. We all just pay a flat tax when we get into situations like this, which makes our day just a little bit more crappy. In fact, in 2014, an investigation into the police department of Ferguson, a city in Missouri, revealed that as much as a quarter of the city's budget came from these types of fines. Now, these types of fines can be deliberately targeted towards individuals or not. Either way, the people with less income still end up paying more. A study done recently showed that the property taxes account for more than 30% of state and local tax revenue in the US, with the most tax being paid by young, lower income homeowners. A benefit, however, of this tax system is that it would encourage people to earn a higher income and to improve their quality of life, which will mean that they will eventually end up paying less of this tax as a percentage of their income. But the thing is, people don't increase their income just to pay less of this tax. They try to increase their income to live a better life. This type of tax gives the government at least some sort of certainty because in any economy, people will always need their basic necessities and will always spend no matter what, even if they are out of a job and unemployed, like in times like now. It can also be the case that the government simply isn't concerned about this type of tax too much, as it is a necessity and people just accept it. They would be much more focused on the progressive tax side of things, as that side is much more dynamic. For example, marginal income tax rates get changed almost every year in the US, and the subject of corporate taxes are a commonly debated hot topic in US politics. The politicians and everyday citizens barely mention or even think about this concept of regressive taxes in society. If we want to reduce income inequality, then perhaps focusing on progressive taxes is the way to go, rather than looking at regressive taxes. I want to finish off the video by giving one last example of regressive taxation, and that is something called a sin tax. These are taxes that are on items like alcohol and tobacco. Now, although the actual tax on this item is the same for everyone, it is important to note that with people of low socioeconomic status, they end up paying more. Especially if you are in the low to middle class, you are more likely to be surrounded by people that are generally more inclined to have drug-related issues, substance and alcohol-related issues, and addictions. This will almost definitely mean that they will end up paying more, even though their health, wealth, and everything in between is most at risk. I'm curious to know what you guys think about this. Please write your comments down and we'll have a discussion about this. So yeah, this was my first video, guys. I really hope you enjoyed it. Please leave a like, comment, or subscribe if you did. I would really appreciate it. More videos coming soon. Let me know what topics you want me to talk on, and thanks.